What's going on, guys? Broke ass investor back. Holy crap, it's been a long ass time. Um, I've been, well, not making YouTube videos, but making podcasts here and there because I guess they're a lot easier because you just hit a button, record, nobody even has to see you. And for YouTube, I've been, as you know, for anyone who's been watching my YouTube videos, I've always had a chalkboard in the background. So I had some preparation and setup for it. Obviously, I don't have the chalkboard today, so it's not completely gone, but it'll be back. But for now, I just wanted to give everyone an update for those 316 subscribers who care. Hopefully, I'll add a few more with this video. But anyway, so this video is more so about my dividend portfolio and what I have done since I last, I guess, made a YouTube video, because I know, there's a lot more people use YouTube and listen to YouTube versus listening to podcasts. So it's good to reach out to both. So if you're interested in the podcast, it's under the Broke Investor as well. Same picture, so it's easy to find. And it's all the major podcast apps. But anyway, so obviously, for those of you who don't know, I'm a dividend investor, obviously, and I invest for dividend-paying stocks, and I plan to hold those stocks forever until I croak and someone else can take them on in the family. But the idea is you invest in companies who are going to pay you dividends and pay you dividends forever. And you don't want to have to sell the stock. You want to, just hold the stock forever. So essentially, you're not touching the capital. You're just, investing in the stock one time and you're just collecting the dividends. From there, you're either reinvesting those dividends back into that company, or you're investing those dividends into another company. At least that's what I've been doing. So that goal has not changed. Again, I started, actually this month will be 3 years since I started dividend investing. So once I close out the October data, I'm going to post hopefully another video about the progress I've made over the past 3 years. But lately I've been making some changes that I didn't think I would ever do. So let me just start with, I have a book I've been reading. It's called Get Rich Off Dividends. I believe it's called. Mark Lichtenfeld writes it. And it's been taking me, let's just say, a year to read this damn book, because I don't read. I hate reading. I never, I can read if I like it, but even then, it's still a struggle because I hate reading. I'd rather watch it. I'd rather listen to it. But there's certain things, and I wanted to read a couple dividend books this year, next year, etc. So eventually I'll get through this book. But anyway, as I was reading this book, I'm more so reading to his strategy, and it's more so really focused on dividend growth. So he has it's called a 10, 11, 12 strategy, but long story short, he's investing in stocks that are growing their dividend, around 10% a year. So now, in thinking about that, I looked at my portfolio again, and I thought to myself, why am I holding stocks that have not increased their dividend, since I own them, or even prior to that? They're just paying me the same exact dividend every year. How is that worth my money? How is that keeping up with inflation? It's not. That's the thing. It's not. So these stocks, yeah, maybe these are the same stocks that have a higher starting yield. However, 10 years from now, 20 years from now, is it going to be the same crappy old dividend, or is there going to be growth? So I had to, reanalyze my whole portfolio and think, like, what stocks am I invested in that aren't really providing for me what I need to get to hit my goals? Because over the long term, you want these dividend stocks that are going to give you a raise every year, right? You're giving them your money, so you can make income, passive income. And similar to your job that you want to raise every year, you want your passive income to have a raise every year. Because eventually, the whole point of dividend investing for most people, I'll say, is they want to retire off of it and live off that money. So you're not going to be able to live off, say, $80,000 today And 10 years from now, obviously there's something called inflation. So you need your money to go up. You need these raises. You need to live off these raises. And it helps if every single stock you own gives you raises. So I had to look at my portfolio and make, a few changes. And I sold out stocks like Glad, ticker symbol GLAD. They were paying 7 cents a month. They actually lowered it with COVID to 6.5 cents a month. But regardless, I didn't hold them, I didn't go crazy at that time, but they're not raising their dividend. In fact, they lowered their dividend. So is this a good stock to hold for me, since I'm holding 10, 20, 30 years from now? No, it's not. So I sold Glad. It was, painless. I'll live on. I don't need a stock that's not going to raise their dividend because, again, if I was retiring today, a stock like Glad may be better because I need the income now. I need that higher starting yield. But since I don't need the income now, I don't really care about that starting yield. I care about future yield on cost. So, I had to sell stocks. One was Glad. Another one was actually Ford. I was holding on to Ford, expecting their dividend to come back. I believe in them, American company. I'm rooting for them. But even before, when they were paying a dividend, it was 15 cents a quarter. And it was always 15 cents a quarter. So what the hell good does that do me? That's not a raise. They're just paying the same dividend. And right now, they're not even paying the damn dividend. So why not just take my loss and move on with my life? And that's what I did. Sure enough, I took my loss, which, by the way, is good for me because I need some offset against dividends, my tax return, because I have enough crap going on this year that I don't want to owe, too much in taxes. So I did it for a lot of reasons. Mainly, they're not paying a dividend and they're not raising their dividend even when they bring back the dividend, which probably would be less than 15 cents. So I sold Ford, and I also sold my favorite stock, my number one holding for a long time, and that stock is ticker symbol APLE, Apple Hospitality. And I'll get into why in a second, but the main reason is they haven't been paying a dividend since COVID, since March. They paid 10 cents a month prior to that. They've never raised their dividend, as far as I can remember. And so it didn't really fit the criteria. It didn't fit the mold what I'm trying to do in my portfolio, in my taxable brokerage. I need stocks that are not only going to pay me dividends now, but they're going to pay me dividends next year, the following year, and the following year. And not only that, they're going to increase their dividend. And hopefully, it doesn't have to be 10%. It could be 5%. I'll accept that. There's ups and downs. So, anyway, yeah, I had to bite the bullet. I had to get rid of my favorite stock. And I sold APLE, Apple Hospitality. Now, that being said, what I mentioned before is I also had, obviously, aside from the whole dividend growth thing, which I'm working on, again, revamping my whole portfolio, which, I'll do another video on. But like an example of a stock I owned, I just bought Texas Instruments. This is a company who, they make semiconductors. Before that, whenever I heard about Texas Instruments, I heard, to me, at least on my age frame, I'm thinking graphing calculator. That's all they make. Why the hell would I invest in them? They don't do anything. And that's what I said, at least for years I've been investing. I've kind of ignored the company. But they have double-digit raises every year. I mean, sometimes over 20%. I'm like, what is going on? So this is the kind of company I want. And if you look at their income statement, their balance sheet, I mean, it's very impressive. So that's what I did with my APLE money. In case you were wondering, I bought Texas Instruments, ticker symbol TXN. Anyway, I kind of cut off from what I was saying before. I learned something recently, and I learned that all REITs pay ordinary dividends versus qualified dividends. Most common stocks pay qualified dividends. So if you hold them for, a specific period of time, all of your dividends are considered qualified, hence taxed at capital gains rate, versus ordinary dividends that are taxed at income tax rates. Now, does this matter? Yes, it does. Of course it does. I knew about this from the beginning, by the way, when I started, but I was making little to nothing. I'm still not making that much, but obviously enough to start thinking about taxes. So anyway, real estate investments trust REITs such as APLE, such as O, such as STAG, ticker symbol, STAG. Those are the REITs I own. They pay an ordinary dividend, so I'm going to get taxed. For my bracket, it's 22%. So that's, I believe, the income tax, bracket I checked last, and the capital gains rate is 15%. So that's a difference of 7% every single year. So why not, instead of keeping these REITs in my taxable brokerage? Again, taxable brokerage is money I'm getting now that I could take out and do whatever I want now, but I'm paying taxes on income, on capital gains from selling a stock, or dividends received. So, and that's regardless if I reinvest or not. Now I have a Roth IRA account, which obviously is, that's a retirement account, and there's tax benefits to that, to that account, and that is all the money that you put in. You don't have to pay taxes on the capital gains or dividends as long as you take it out at a retirement age. Keep in mind, this money that you're putting in is already taxed, so you already paid tax on your paycheck, whatever. But anyway, why not put the REITs in my Roth IRA, so the dividends that are coming through each and every year, I'm not paying taxes on, at least until I retire. Once you retire, obviously the new dividends that come in, you pay taxes on those, but the taxes that I'm making, the dividends that I'm making over the years, I'm not paying taxes on those. So why would I pay 7% difference on all this money when I could save it, save money on tax? I'm have a Roth IRA for dividend portfolio as well, so I might as well utilize that to my advantage in putting the REITs there. Obviously, I'll have a couple other common stocks there, like J&J I have in there, Walmart, things like that. But I'm gonna put all my REITs in my Roth IRA, because I'm gonna save 7% on taxes every year. It'll go up, I'm sure. Who knows? With all this freaking election bullshit. So anyway, so that's a recent move that I did make. I'm putting all of my I haven't done it yet. I bought O in my Roth IRA. I still have O and Stag in my taxable brokerage, but eventually I'm going to sell them out. I'm going to buy them in my Roth IRA and just keep them there. And my taxable brokerage will still be obviously diversified, just without the REITs in there. So yeah, I mean, those are the main things I've been working on, kind of reallocating my whole portfolio. So the long-term goal is the same. I plan to retire on dividends, and I don't plan on selling stocks. Again, I have to sell stocks here and there for occasions like this, but the companies I invest in, it's for the long term. I believe in them, so buy and hold forever. I'm not using DRIP. I am reinvesting the money myself. I use DRIP in my Roth because I'm less involved with it. My taxable, though, that I use Robinhood for it, I'm reinvesting those dividends myself. I don't really want to, because I calculate my dividend income every month. I don't want to be playing with fractional shares either. So there's that. But I like reinvesting, those dividends myself. And just to give you an update, as of last month, September, I'm up to $75 a month in dividend income. I think I had a goal of $100 a month by end of this year. I mean, obviously, I was mistaken on that. Hopefully next year. Hopefully. It's not easy. It takes a while. This is the get rich slow process. So you need to be patient with dividend investing, but it is very rewarding. Each milestone you hit, when you hit $10 a month, when you hit $50 a month, once I hit 75 a month, I was like, oh my God, it's great. Once, 100, I can't even imagine that feeling. It's not a lot of money, but it could pay something. It could pay a bill, maybe your electric bill in the winter. I don't know, but again, right now I'm reinvesting it anyway. So I'm still having fun. I'm still tracking my dividends, still investing each and every paycheck, little by little, nothing crazy. And again, as you guys know, I'm just a broke ass investor. I'm not a financial advisor. So this video is for fun and entertainment. More so, entertainment. Hopefully you enjoy this. I know the background's not as fun. You don't have the beautiful chalkboard. You just have an ugly basement to look at. So, but regardless, I hope to make, you know, maybe one video a week from here. If you recommend certain content, feel free to reach out. If you do miss the chalkboard, let me know in the comments. Again, thanks for watching, guys. Good to talk to you all. Later.